Good morning, everyone, and welcome to the European Crossover webinar. And if you weren't with us in Asia, we saw a lot of big news as the RBA cut. We saw the Fed take action. We saw the ECB launch their bond buying program. So, I mean, it is full-on 24-hour trading. You can't take a break because just when you don't even know anything's going to happen, all of a sudden the ECB jumps out, the Fed comes in, and even the RBA steps in, and it's just one after the other. And actually, even Japan was in authorizing. I forgot what their thing. They were buying. Trying to remember what it was they were buying. But anyway, really just a real active session in Asia, and we saw the market swing quite a bit. I'm talking about the S&Ps. They continued the rally and then turn around and just dropped off like a stone. Just quite the move, to say the least. Oh, you can see here the SPOOs are trying to come off these lows. We'd continue the afternoon's rally and got all the way up to 2460. It looked like I posted some shares and charts. Looks like we potentially could even make it to 2480, but actually, in the Nasdaq, this actually confluence, I think, with the 61%, and that pretty much the SPOOs are still being led by the Nasdaq. And we rotated lower, and we came down here, which was going to be 2305 was a 70%, 78% here in the SPOOs, and then we had some additional support at 2294, but it was the Nasdaq that came down here lower. Go with me. And I was sharing some charts on Twitter and doing some stuff on there, looking for that low in here to go and hold. We did see a rally come off of that, and then of course looks like we ended up dipping a little bit later on. We've come up a little bit off of those lows again here, where we're at now. So we've actually revisited this down here. I guess this was here. I even forgot. Well, it was up so late. I only slept for about an hour and a half. But anyway, yeah, so here's that move. So we got that up here. We dipped back, and it's just been something else. But I guess we came back down later on and revisited down here. I'd already called it a night when we came back down here to revisit it and made new lows. And from there, we've been working higher, and we're at the VWAP right now. And you can see here with crude oil, it's trying to come off its lows. There you go. And there's NASDAQ. And lastly, we'll go into just take a quick overview of gold. Okay, there we go. So you can see here, we did come down here to 14. I wasn't even paying attention to gold. Actually, I didn't even realize that. So we came all the way down to 1463, and what we're 1486 now. But we are above VWAP, so you can see that here. So we came here, tested it down here, came back, and we're moving away right now from VWAP. Let's go in and move back into FX. Coming into today, no data here in Europe. So we do come into the standard weekly initial jobless claims. We do have Philly Fed, 8:30 Eastern, and a lot of sub data like the Philly employment and prices paid. We do have Canadian housing prices at 8:30 Eastern, LEI at 10 a.m. Eastern, and that'll be it. And just cover a couple of quick news stories because it was an eventful, it was eventful in Asia. I mean, the ECB comes in and announced their bond buying package, 750 billion, I believe it was. Then boom, the Fed comes in. They're going back. I was even trying to remember, mine's racing all over the place. And then Australia comes in and they cut. See, Australia and New Zealand dollars dive, long bonds crash into the RBA cushion. Australia and New Zealand dollars tumbled to multi-year lows on Thursday as panic selling swept global markets, overwhelming attempts by central banks to cushion the fallout from the coronavirus. The Aussie dollar sank to 55.69 and briefly fell as low as 55.08, the lowest since 2002. It also already had dived 3.9% on Wednesday in the largest daily decline in a decade, bringing losses suffered for the week so far to a sickening 9.8%. The Kiwi was quoted as low as 54.72, bringing losses to the week at 8.6%. The RBA tried to steady sentiment and stem a rout in government bonds by announcing plans to buy enough debt to keep the three-year yields around 25% in its first step into quantitative easing. The three-year bonds duly rallied and yields fell for a steep 26 basis points to 36 tenths. Yet futures for 10-year bonds collapsed by over 50 ticks in the largest daily drop since 1992. Holy smokes. Yields on 10-year cash bonds shot up to 44 basis points to the 1.61. The biggest rise since 1996, when the market was far smaller and less illiquid than it is now. Dealers reported huge strains in bond markets, and distressed funds sold any liquid asset to cover losses in stocks and redemption from investors, a tide fueled in part by automated selling by algorithmic funds. Such was the speed and scale of the fall in the Aussie that traders suspected the RBA might have to intervene to restore a two-way market. The bond market is dysfunctional, said Prashant Nanwana, senior Asia-Pacific trade strategist at TD Securities, noting spreads and bids and offers had widened drastically. These are not typical bond market moves in a risk-off environment, and neither is the dysfunction desired, particularly as the bond supply is likely to increase, possibly significantly. The government already launched one stimulus package of more than $17 billion to help cushion the economy, the coronavirus, and is expected to announce another soon. All this spending will be funded by debt. Yeah, here's the deal. The U.S. is doing their own, but the U.S. is a lot stronger market, and even though, has a lot going for it, so hence you can see why the Aussie bonds really got whacked. The Eurozone bond yields tumble after the ECB unleashes emergency stimulus. Government bond yields across the Euro slid sharply on Thursday as the European Central Bank stepped in with emergency stimulus measures to calm panicked markets in the face of the coronavirus outbreak. Italy, which was seen as borrowing costs jumped sharply in recent days, led the move in yields lower to its two-year bond, slumped by more than 100 basis points. The two-year Italian bond slid as much as 90 basis points to 1.40. Spanish and Portuguese 10-year bonds slid around 30 basis points. The ECB launched new bond purchases with $700 billion in euros at an emergency meeting late on Wednesday in a bid to stop the pandemic-induced financial rout, shredding the Eurozone's economy and renew concerns about the bloc's viability. Yeah, you should have been here in Asia. Sheesh. It was something else. It was truly something else. And then lastly, the dollar. Holy smokes, look at this thing. The dollar steamrolls all in its path in a dash for cash. The dollar resumed its relentless climb against major currencies on Thursday as a wild financial market volatilities and worries over tightening liquidity triggered by the coronavirus pandemic sparked investor flight into cash. Sterling teetered to their lowest levels seen since 1985 against the greenback. The Aussie skidded to 17-year low as the New Zealand dollar crashed to an 11-year, dumping riskier assets. The euro briefly rose against the dollar and the pound after the ECB announced a $750 billion bond asset and purchase program in response to the coronavirus outbreak. But even this effort was overwhelmed by a stampede into the dollar. Investors are selling what they can to keep their money in dollars due to the unprecedented amount of uncertainty caused by the epidemic threatens to paralyze large swaths of the global economy. This is similar to what happened during the global financial crisis in that investors are selling what are normally considered safe haven assets, said Junichi Ishikawa, senior FX strategist at IG Securities in Tokyo. The logic is the biggest hedge against risk is holding your money in cash, so the dollar's being bought. You know, we talked about this, remember 2 weeks in the ago in the chat room, I kept saying people want cash, 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 and I put in caps, cash, C-A-S-H. And people saying, yeah, but they could be in gold. I go, they want cash. When I mean cash, I don't even mean bonds. I want just cash. Just put money, you know, currency in my hand, cash. And obviously the dollar. But this is some, okay, this is the logic is the biggest hedge against the risk is holding your money in cash so that the dollar is being bought. The dollar rose 0.8 against the pound, approaching the strongest since at least 1985. The greenback jumped to 3% to an 11-year high versus the New Zealand dollar and rose against the Aussie dollar by 3%. The RBA cut interest rates for a second time this month on Thursday. I mentioned that, and there wasn't even any news about that. And when it said that, after an out-of-schedule policy meeting. So, like I said, man, we got hit with waves. I mean, I just happened to be, I was late doing the analysis, the Asian analysis. So I was doing that, and I was trying to follow the S&Ps, trying to catch a little bit here, and I just happened to blab a couple things on Twitter. Next thing you know, this thing's just, you know, we're just getting hit. We get hit with the wave from the ECB, the $750 billion purchase. The Fed goes and steps in to back. We can always get back to that later. And then the RBA comes in with their own stimulus package and cutting rates. It was just crazy. But anyway, in many cases, investors are unloading treasuries and other government bonds as well as gold in order to keep their money in dollars. And that's what I was saying before. And I didn't really mean it when I said it 2 weeks ago as a cash play. I mean, a dollar play. I was just saying that people want cash. Just get me in cash. I don't want bonds. I don't want anything. I want cash. So in many cases, investors are unloading treasuries and government bonds as well as gold in order to keep their money in dollars. This has confounded many analysts because investors normally buy government debt and precious metals during times of uncertainty. The euro initially rose after the ECB announcement, a new asset purchase program, but the common currency erased its gains to trade to little changed at 9.24. You can see right now we're at 8.15. The ECB purchase scheme, which was announced as an emergency meeting late on Wednesday, came less than a week after policymakers launched into a fresh stimulus measures. Major central banks this week have announced emergency interest rate cuts, asset purchases, and dollar liquidity provisions in an attempt to calm financial markets, and the effect has been less than any policymaker had desired. So let's go move into the analysis. We'll start with the euro. I mean, it's kind of nuts because, you know, yesterday I was a bit, you know, perturbed because, you know, you're trying to do analysis, but I'm just saying is it's moving in such big numbers that it's almost like the analysis from literally less than 12 hours ago, but is almost fruitless because it's like, okay, you know, the analysis should be like right, 10 minutes before you're getting ready to do a webinar or something. That's how crazy these moves have been. And look at the euro. So, I mean, so like, look here, the euro fell to 8 even on the, and I happen to be doing it. This is when the ECB hit. The euro fell to 8 even on the backdrop of the ECB launching a $750 billion purchase program. The euro has retraced nearly the entire move of the last 3 weeks. Support is at 835. Well, I guess that kind of held up sort of. And resistance is going 958 followed by 1002. So I said 835. Well, you can already see that we've been as low as, yeah, because at the time we were above it. So we'd already come down here. So we've already been down to 8 because I did say that we already come down to, you see, fell to 8 even. So we'd already rallied up. And now saying, okay, on the back, way back down, it's 835, but we've even gone past 835. So the low so far has already been 814. You can see this high right there. That's going to be the support, which is 804. Look how much these numbers are just changing. Well, I'll tell you what, man, the FX is now, when it comes to volatility, yeah, there's volatility all over the place, but FX, man, holy smokes. And then on the upside, I was saying resistance of 958. Well, they're not going to be resistance anymore. Once again, how quickly the analysis changes. Resistance, you can see here, is going to be 915 right there. Followed by 958. And with the cable has obliterated, taken out 120 and 115 in the same trading session. Resistance is going to be 1670, followed by 1740. Support is 1492, followed by 114. Well, you can see how we've already taken this dip here, but it looks like we got as low as 1463 right here, 1470. That's just going to have to be the support for right now. So hold on. Trying to clean my glasses. Hang on. See, look how fast these moves are coming. Can you imagine that? Support being nearly 5 figs lower. And resistance is going to be 1639. So it just came across right now. Taiwan cuts their interest rate. Wow, look at this. Look at the Aussie dollar. The Aussie's on its way, is on track to the weekly support level of 55.77. Well, not bad because it was before it got there. That wasn't too bad, 55.77, but you can see they actually nabbed closer to 55. Um, Support is 56.82, followed by 58.20. So you can see this seemed like when I was doing the analysis, I was already frustrated because it's fallen so far. So you know what? I looked at the weekly. I go, it's on its way to 55. It's on its way to 55.77. And look, the next I'm saying the support was at 56.82. Well, we already fell almost 100, almost 200 pips from there down here to 55. So the low has been, and which is going to be right now, is going to be 55 even, 55 cents. But that's how big these moves are. Boy, it's been a pretty good little rally. Look at that. There's going to be resistance 55.71. It's 57.71. That's going to be support 56.34. And let's go move into the Kiwi. So the Kiwi finished on its lows and is headed for 53.72. Well, got that part right. 53.72, but you can see the low was 54. Looks like about 54.80. Support on the way down is going to be 55.47. Well, obviously, we've already come down here. Let's see where we stand on a much shorter time frame. There, coming across 55.70. You can see resistance coming across there. 57.05. So the dollar CAD vaulted back on the close. Using a fib extension of the prior day high and yesterday's close, we have immediate resistance at 47.13, followed by 47.92. We are seeing it kind of ease back a bit right now. We're forming a bit of this, a bit of a medium-legged doji. So we said resistance would be 47.13. Well, we're actually running out of gas up in here, which is interesting. Looks like we are getting tired up in here. So right now, resistance is going to be 45.89. And this is going to be support, because if we hit these triggers, this is where it's going to come in, which is going to be 43.50, 51. Well, the dollar peso's upside target now is 25 even. Resistance will be 24.65, followed by 25.30. So 24.65 is good. And support will be 23.84. The dollar yen has continued its upward trajectory on the continued backdrop of the dollar funding issue. The pair has reached the prior resistance level that we had noted, which was 896, with the major pivot at 927. Resistance will be 985, which is a 78%. So that's what we're looking at, 985. Support is going to be 850, followed by 780. And onto the dollar index. So the dollar index is on a path to challenge 233. That's where I have a weekly level there. We are getting pretty stretched. If you were, well, I don't know if you were in Asia, if you saw, Blake was actually tweeting a few times during the Asian session, and he said that the moves that he is seeing in FX are so big right now that he feels that we're not too far away from capitulation, where we could see one more extended leg in dollar buying. Let's see if that materializes today, although we're coming off of those lows in the Aussie and Kiwi, and unless we take another nosedive in the cable, which is already so low, or against the peso. But I have a weekly level at 233. So even though that's still above us where we're at right now, let's go for 233. It's a big weekly level, or it is a weekly level further up. And looks like where we can go to. Swiss National Bank interest rate policy decision is up right now. They're expected to hold though. Support will be 0107. No change from the S&B, no change. That was expected. Negative 0.75%. 0.75. That is. S&B will be intervening strongly into the FX markets. Bear with me one moment. So they're going to be intervening in the market. That's what they're saying. Forcefully. I'm just trying to note something here in the chat room. Bank of Japan bought 206 billion yen of ETFs today. So once again, we've already covered on the upside, and for the dollar index at 233, it's a weekly level, and on the downside, 0107. Let's go move into the cross rates. And they are expecting a negative growth rate. So you can see here, obviously, the Kiwi yen came off and went even sub 60. We are forming a hammer bottom for right now. We'll have to see how the day finishes out. But that's what I'm saying. Some of these extremes may have already started to take place, i.e. the Kiwi, Aussie dollar. So we'll see what, and we're already seeing the dollar CAD. Remember, that could have added even further. Although it's still very, very high, but it didn't. So maybe we're starting to, tire out now. Support right now is going to be right there, 60.80. And support, you can see that clearly, which is going to be 62.27. Boy, this is really all over the place. Look at this range here. Support's going to be 1704. And upside You can see this 1925, but here's the key levels, actually just a bit higher in 1992. But right now, this is where we'll get them to press the stops, which is going to be 1925. Let's go move into the Euro-odd. Man, look at that. Holy smokes. But we are forming a shooting star. Now, this is what you call a shooting star. Resistance is going to be right there at 92, 96. Holy smokes, look at this. These moves are just incredible. That's 1,100 points from the high. Well, no, it's going to be 90. Yeah, not well, 98. 900 points from the high. Well, this is going to be resistance no matter what. It's a long ways away, but 93.09. $91.08. $88.79. Must be hitting on something else. So here on the, let's put in maybe the wrong one there. Right there, 93.43. It's 90.58 on the downside. These ranges are so wide. That's as close as we can realistically get. I mean, to say it's support. And move on to the ASEAN. Another bloodbath. I kept saying this yesterday during the webinar. I don't know why people were trying to step in and try and pick up the Aussie. It made no sense to me. But anyway, support's right here. Can even make the case a little bit higher right there. It's already been there, so it's going to be right there, 61.26. And there's resistance 63.12, 63.13. And you know, this thing's been shellacked. Guppy, which was so strong before, and it's just been just look at this. Unbelievable. Well, the sterling's being taken to task for Brexit. There's no doubt about that. Major support comes in right here, 23.77. We are forming a tweezer bottom. Right now, support is 25.03. And German IFO is going to be at the top of the hour. Resistance doesn't come up till 27.19. Holy smokes. There's a 5-minute chart. Still, look at this bloodbath. Look at that. Sheesh. And that's on a 5-minute chart. So resistance is right there, 26.53. And lastly, sterling odd. Only thing weaker than the sterling has been the odd. And you can see resistance right there, right where they went to, 2.0416. Holy smokes, look how far they've gone. So there's resistance right there. 0290. 0324. We had 0331 yesterday. And you can see all the touches coming in right there at 0035. Well, looking here with SPOOs, they're trying to make this stand here. I thought they were going to defend this from yesterday, and then we fell back, and it just doesn't look good. Look at the daily. We do have a little bit of a tweezer bottom here on the daily. It'll be interesting to see how we. There's been so much intervention and stimulus packages. Maybe this can hold because this is 22.64, so you're going to have a tweezer bottom. So if we can, the key is going to be to hold above 23.51. That's going to be the key here. So you can mark this. That's going to be key right now. because we got this 2264, and this is on a daily, okay? And we have a tweezer bottom. The key going forward is to hold above 2351. If we can hold above 2351 on the close of low, it's going to be important during the rest of the day that we defend 2351. But if we can hold above here, we have the potential on Friday to push higher. That'll be the key there. And that's all that we have. So we'll see you in the chat room. Thanks for joining us here on the European Crossover webinar.